Thank you, Ros. I will ensure we don't run through lunch. I'd hate to see a stampede to the door as I'm midway through, so I will hustle this along. I should really give a little bit of background as to how come a broker is so, shall we say, vigilant in terms of going after fraudulent application. We, in 2005, set up a insurance vehicle in Gibraltar with the grand plan to trade online. The insurance vehicle was called Southern Rock. Our first product was e-bike insurance, which was probably the first, I think, in the UK online end-to-end product. Obviously, writing motorcycle business flew in, low cost, loved it. In 2006, we extended that to van insurance with very similar result. Business flew in, still a very low cost model, loving the loss ratios, superb. And then we had the big win, e-car insurance. Great, how could that be going wrong? Aggregator technology was coming to the fore, product out there, couldn't believe the number of cases going on every day. I think we even had at one stage a little Bing set up on a computer, which was just a solid tone through the day of business coming on board, and we were all sat there thinking how great we were. Very shortly, really, probably 7-8 months in, we noticed quite a bad deterioration in what we would expect to see from the loss ratios. This continued, and we obviously made a decision that we needed to find out what was going wrong. Claims frequencies were higher, certainly average claims costs were higher, and the losses of Southern Rock were getting higher. So we decided that, frankly, we needed to do some investigation into what was going on. As I say, loss ratios in 2008 had risen to 115%, and clearly there was a need for some action. What we had discovered when we had audited the outsourced claims division that we were using, that from what we could see, around about 30% of all the claims that had been settled had an element of non-disclosure on them. Now, obviously, that led to us having a bit of an issue with the outsourced claims unit, and also with our own people for not auditing it deeper and quicker. However, we were where we were, so things needed to change. So we needed to look at what it was. Online fraud aggravated by aggregator behaviour. As I think somebody touched on earlier, huge push on price, very aggressive. Claims farming, as we're obviously all aware, we've heard from claims people earlier today. Ghost broking, again, I think Dave touched on. PI claims frequency growth. What we noticed was that through the online model, we were seeing a lot more PI claims coming through, indicating clearly there was some skullduggery going on. Certain postcodes were rife for it, which I think is common knowledge really across insurers, but it was particularly relevant in this particular model. And still at the time we had market underpricing. I think, without wishing to have a pop at the insurers present, the view back in 2008, 2009 was the fact that, similar in the way that we looked at it from a broking and insurer perspective, in that volume was good and these people could provide you with volume. At that time, insurers were still thinking that aggregators, in fact, you'd give that a discount because you can pick up more volume and it's a lower cost model. So, what do we decide to do about it? Well, the first thing we started to do in about Easter '09 was to start manually checking NCD for every policy that was incepted. And along with that, we also requested copies of driver's licences for all drivers. In addition to that, we ran all new business through the Q database. And we developed fraud screening reports so that, I mean, it's difficult. Somebody had mentioned earlier about categorising and whatever. It is difficult to actually just say, well, because that person is of that, shall we say, ethnic background and lives in that postcode, they are more likely to make a claim. That isn't actually the case, but certainly the postcode areas were very relevant to it. We introduced a system called Red Eye. Now, Red Eye, I will come on to in a bit more depth in a moment, but effectively, Red Eye was a marketing tool we had, and it was actually designed to monitor when clients dropped out of a web journey. So we made some adjustments to that and refocused it to try and pick up where people were altering things on the journey, which again I think the guys touched on earlier, but we'll go into it in a little more depth. And the smart underwriting, it's not that smart really. It was, again, just basically saying if somebody had put on there, I've had a full licence for 4 years, and they had 1 year's no claims bonus, again, you can have a check at that. A lot of what we were seeing was that people were saying they had a full UK licence for 9 years, but they'd only actually been resident in the UK for 4 years. So, as I say, not overly smart, but quite a useful tool. This is what we'd seen happening off the back of the loss ratios. As I say, we introduced the licence checking and NCD checking in early '09, well, probably the second quarter '09. I think without that, undoubtedly, '09's figures would have probably been 125 to 130%. And as you can see, the impact. Now, obviously, there's been some rate inflation over the last couple of years, but with regard to this particular model from Southern Rock, the rate inflation only actually accounts for 9% of that improvement. So I think, again, as the guys were saying earlier, there is, we believe, upwards of 20% to 25% improvement by taking the action that we've been taking. Oh, wrong way around. As for the approach, we issue a disclosure warning on the front page of our website, which, again, I will go through in a moment, but it has changed dramatically. It used to be a huge red thing that said, if you're going to lie, go somewhere else. We've kind of changed the framing of it a bit now to make it a little more user-friendly. We obviously capture the data. In comes the price. It gets offered up. Then we do the verification work, which will either lead to the policy being fulfilled as per the details, or being resubmitted around if there's a non-disclosure for a revised price, or if the level of the non-disclosure is so great, then obviously the policy will be cancelled, and the cancellation penalties are heavily laid out to the client, so there is no misinterpretation about what's going to happen. Just saying about the message, we moved from the very large red warning to something that was a little more subtle, which does seem to have worked. We've, as it says there, we've seen a 30% improvement in the dropout rate going through. Honesty is the best policy. As I say, it's made very clear. The problem, as we were talking about earlier, is the level of cancellation that you actually end up getting, and this has caused us some issues, and I think somebody had mentioned earlier on about complaints and the way in which you handle complaints, and are they just a screen. Certainly what we've found is that we've needed to go on to Radio 5 Live, into various press to defend our stance on what we're doing, and that culminated in a visit from the regulator a couple of months ago to make sure that we weren't, as they were, I suspect, worried about, that we were profiteering from cancelling policies. But fortunately, we came through that, well, I'd say with flying colours, but we certainly came through it with an acceptance that we were doing the right thing. As we go down through the web journey, again, we keep reinforcing the message. Be honest. It's all around the honesty part. Now, on to Red Eye. Now, this is where, if people haven't been quite as honest, we will indeed hope to find them out. As I said earlier, it was a marketing tool, and it will pick out where people change things. Again, I think the guys were talking earlier about a change in age or a change in postcode or whatever, and this is exactly what it will do. So it will produce us a report based around postcode, around occupation, around driving licence, which will then, if the policy gets taken out, flag onto a fraud report, which will then hit somebody's system within hours, that can then be investigated. Again, not always popular with the people that one rings up, but as we found out, totally necessary. In terms of a case study, this particular person requested 7 quotes. Change the occupation, police officer, teacher, armed forces, clearly liked a uniform. Postcode, changing. I don't actually know, but my assumption is that L30 is probably less desirable than L23, but I'm not overly familiar. Maybe somebody from Liverpool could tell me, but change of use, change of date of birth. This is always a good one. Yeah, sort of rather moved it, and then at least did have the decency to move it back. But the final information submitted was a teacher, 4 years no claims bonus. And again, as the guys were saying earlier, the savings on that particular motor policy were £1,368. Now, you know, as I say, with the way that the rate inflation has gone, particularly based around certain postcode areas, you can see why people do it, but you just have to be vigilant to catch them out. From our actual checks on the lady, who we contacted immediately, we actually found out that she was an admin person, lived in L30 and had no NCD at all. So that policy was voided. She was charged a cancellation fee, or as the guys in our unit like to call it, an honesty tax. I'm not too sure the FSA were overly happy with that term, but anyway. Why do we do it? As I say, I don't really wish to be stood up here as some kind of Robin Hood type character. I mean, we do it for our benefit and for the benefit of the industry generally. The bottom line was that with the loss ratios as they were, we were in serious danger of losing our capacity. So as an example, in terms of the cost of it for us as a broker, and I think this is probably where it's taking a bit of time for people to maybe get their act in order and make that decision. I mean, we moved from what was a technical help desk of 5 people to actually having about 108 people working in validation. And that obviously does come at a cost, and it's at a cost to us. However, losing that capacity and then not being able to move the business forward would have been a far bigger cost. Again, what we've tried to do, well, what we have now done in terms of eCar is we have moved it from being a solus provider in terms of Southern Rock to a panel. And certainly, I think, well, some of the guys here, AXA, Aegeus earlier on, Groupama, Liverpool Victoria, Aviva, have all been more than happy to come onto that panel. And obviously, our end game with that is to ensure that we pick up better rates because we are actually ensuring that they are getting clients that they want to actually underwrite. What do we do? Well, we put the correct info in. If it declines, we cancel it, or we write and get an additional premium, which is obviously then passed on to the insurer. This has changed a bit in terms of the volumes that we see going through this. As we're saying, in 2011, 14% of policies had a discrepancy. Now, in 2009, that was 34%, and in 10, that was about 26%. So it is coming down. Now, we'd like to think that maybe we're cleansing them through our system, and when they've hit it once and realise they can't get away with it, they don't come back. Average additional, 240 quid. And 87% of those now pay. And again, that was significantly different back 2 or 3 years ago, where we had some quite serious bad debt issues, which I think is probably more indicative of maybe we were being targeted more by the organised element back in those days, whereas now it is a bit more opportunistic and people actually are quite keen to keep their covers going. As we saw earlier, the loss ratios have improved. And the other notable thing is that we've been able to actually start offering rates in a higher risk postcode areas, which had kind of become no-go areas for a number of insurers, because there obviously are decent risks within those areas, but it's a case of finding out who they are and making sure we can offer them a quote. As I say, that also covers off one of the issues that Jack Straw has had recently about none of his constituents being able to get quotes. Well, if they don't lie about who they are and they are honest and upfront, then they certainly would get a quote from us and our panel. In conclusion, obviously, we benefit from better rates from insurers. Insurers are benefiting from the lower loss ratios, which we're starting to see now be fed back in. And as I say, customers, honest customers, do benefit from the availability of insurance quotes, irrespective of where they live, what they're driving. And our hope, obviously, is that in the long term, the industry will benefit from reduced fraud. That's me, still got an amber light, that's good. Food's not going cold.
Thank you very much indeed, Martyn.